What does the RBI do? What are the functions of the RBI? Of which we covered some. Number one, it is the issuer of currency. Coins and 1 rupee, that is the finance ministry. That is historical. But any federal bank, any central bank of a country, fundamentally is the legal authority to issue currency. So, and we know all that. Our friend already asked about gold. And we know everything about when you print, how much you print, why you print, all that we know. That's the primary, the fundamental, number one work of function of the RBI. The next one is it is a debt manager of government. Central and state government. So I'm the central government, you people are state governments, that's the RBI. So I tell the RBI, can I get 100 rupees? You please float securities on my behalf, treasury bills, bonds. Please pick up 100, sell it to the market and get me the 100 and whatever the terms. You are the state governments, you will tell the RBI, okay, find me a market for my securities, SDL, you will see the graphic. State development loans, states can't float the treasury bills, they can float the long-term bonds, that is the, bonds. And so you sell, what are the limits that the RBI will tell you? For the union government, there are no limits. States, there are limits because there has to be fiscal discipline. So RBI manages my debt. Now there is a problem here. Whether there is a problem which is a real problem or a perceived problem or feared problem. Is there a problem? There may not be. Isn't there a problem? There may be. I'll tell you what. It is. So you are the government, RBI is there. Sir, you get me a loan from the market, sell my securities. You are my debt manager, do it. But remember, RBI is also the monetary authority that sets the rate. It used to, not anymore because MPC has come in. So there was a problem that RBI would arrange the rate in such a way that it helps the government raise the loan cheap. Inflation is there. 6% rates have to be raised. But if you raise the rate when I sell the government security, I have to pay more to the market, which means it will be costlier for the government. I have eaten the namak of the government and I have to manage the debt of the government cheap. So even if there is inflation, I won't raise the rate. There is a contradiction between being a debt manager and being the rate setter. That is why the rate setting function of the RBI got taken away and it is given to MPC because the contradiction was on the face of it hurting, and so you decided to take away that function and leave the rest of the functions without. So that is the debt manager. And I already discussed, rate setting, etc. That goes to, but the implementation is still with the RBI. Though the function goes to the MPC, the implementation is still with the RBI. RBI has to operationalize. Even within the MPC, RBI is half. And if there is a tie, it is the chairman, RBI governor, who breaks the tie. So even while you have given it to the MPC, the role of the RBI is quite substantial. For all your CRRs and SLRs, what you call the regulation, ratio setting, You know, it's the author of the monetary policy. All the instruments of the monetary policy are activated or deactivated by the RBI. So that is another. That is the monetary policy, author of monetary policy. For 5 years, it is the regulator. You want a bank license on tap. It's not that I'm going to issue. I've already issued, and after, I don't know when I'll issue. No, on tap. Whenever there is a request to open a private bank, I'm ready. I'll see if you are eligible and I feel the market needs you. So RBI gives license to banks, number 1. License to open the branches, number 2. ATMs, number 3, and all that. So, regulator. Then RBI is the clearing house. Clearing house. Clearing house means I'm the RBI, you are the commercial banks. All of you have accounts with me. 100 rupees, 100, 100. Now somebody has an account in A bank. He is given check to somebody who has an account in B bank for 1 rupee. So from A to B, 1 rupee has to be transferred. B has an account in the other bank. He has given a check to somebody who has an account in A bank. So these are all banks. End of the day, there are checks, settlements, one bank to another. 100 rupees from A to B have to go, 25 from B to A have to go. I'll net it out and I will see 75 goes from A to B. That is the function of clearing house, settlement, netting. So that is settlement, clearing house. And then there is, of course, custodian of forex. Remember, they are reserves, not resources. You are not expected to use that, except for, some purposes. Somebody said, why not we build roads with that? To build road, somebody from outside India will come, China will come, Japan will come. They will bring their money. They'll bring their money. They'll bring yen. Foxconn will come. He'll build, smartphones here. He'll manufacture, assemble. Whatever he does. He'll bring his money. He'll convert them into rupees and he'll do his work in rupees in India. And you will pick up the forex. RBI will pick up the forex. Forex is forex. You never have enough. If you had $3 trillion, $2 trillion, don't acquire. If you acquire, if you don't need, you don't acquire. Why are you saying let's spend it on roads and buildings? That expenditure is in rupee. Print rupee, collect tax and build it. But then don't say spend your dollar on building the road. That's not the right link at all. We need that for more precious purposes, like dealing with the world and all that, BOP. So, custodian of forex reserves. Custodian. So that is another. Still one more is financial inclusion, which means extending formal banking operations to all so that they can open an account. They have access to loan, micro insurance. They can deposit their money so that that money can be used for the good of them and for the rest of the society. So financial inclusion, Jan Dhan. And then RBI also has developmental role. Developmental. It will ensure that MSMEs come up, and so on and so forth. Developmental. All this the RBI does, and now